Welcome, everyone, to the Digital Investor Podcast. I'm your host, Matt Rudd, and today we have a very special guest, David Tao. Now, not only is David an ultra-high achiever, sorry, David, I've just got to say that because your story, man, but David has successfully exited a very large niche passion site. And what I'm really excited about is you're going to see in this interview, David is, like myself, very passionate about niche passion sites, and we had a really good chat about how they work and what he's been able to do. And what I want you to do today, if you're listening to this, if you have a goal for a 7 or 8 figure website, this is the podcast you need to listen to, because David has kindly agreed to come along and share the steps that it took him to get to that point. He's just exited a very niche website, one of the world's leading passion sites, I would say. And not only has he exited it, but he grew that within just 6 years. So, David, thank you so much for coming along. Your story is seriously impressive. High fives to you and your co-founders, and also to your acquirers. But I do want to say a special thank you for coming along to speak to us about your journey and what it took to grow that site. Can you tell us, first and foremost, the awesome niche that you decided to build your website in all those years ago?
Matt, thank you so much for having me. I'm always excited to talk about this because I picked the niche based on what I was passionate about. I was a competitive strength athlete, a weightlifter, then a CrossFitter for years, and was also a professional journalist and writer and editor. And I really got to combine those two passions. So the company that I co-founded, it was my idea. I remember buying the URL for about $7. Is called Barbend, and we own Barbend, we own Breaking Muscle. The company was acquired about 3 months ago. So we're still kind of in that transition phase, and I'm still very much with the company. But I always wanted a place where I could get the latest and greatest news on strength training, strength sports, what the research said, opinions. I didn't want just what was going on in weightlifting. I wanted what was going on in weightlifting and powerlifting and CrossFit and strongman. This was not so long ago. This was early 2016. And even back then, you couldn't get the results from the World's Strongest Man competition until months after the competition was over because it was a TV broadcast. No one was really writing on it. Yeah, crazy. So this is a day, we think 2016, we think we're deep in Web 2.0 and everything is kind of accessible on demand. But what I found was if I wanted to figure out what powerlifting world records were or what was going on in weightlifting, there was no place to go for that. There were things on, like, there were these little forums on the web, or sometimes you had to go to a newsstand and buy the old muscle magazines to get results. This is in 2016. And there were some people, they had blogs online or they were posting on social, but there was no like one place that conglomerated all this great info. There was no home for people who were really interested in lifting weights and getting stronger online. And I thought, well, I'm passionate about this. It brings me a lot of energy. And I went to my co-founders and I said, I think this is worth investing in. I think this is worth really trying, because I think there are people like me out there. I bet we can make a successful site. We didn't know how successful it would become and how much it would grow, but I thought, I think we can build something, maybe get a couple million readers a year. And I think that'd be really fun. And you know what?
Just a modest goal, David. Just a couple
of
million readers a year. Yeah.
Just a modest goal at the time. And spoiler alert, we grew, I think, beyond our ambitions. We had over 31 million readers in 2022. Awesome. So a little bit beyond a couple million. Yep. And we are really the home for strength training online. So if you want news about what's happening, or the latest research, or how-tos, or opinion, or nutrition, or recovery, or product reviews, we're kind of the place for it. And I think one reason, I'll just get ahead of the curve here. My founders and I, we don't have, nothing's keeping us there, right? Wow. We don't have to stay, the acquisition was not contingent, I should say, on us staying there. But we're there and still there because we think that if we keep putting work into this with the amazing team we have, and now with more resources than ever, we think it's going to be the biggest fitness site online in a couple of years, like overall, right? And I just
Wow.
really want to get up in the morning and say that I founded the world's largest fitness media company. Like that'd be
Yeah.
really not just strength media, but like fitness media. Like as
Fitness.
someone who grew up reading Men's Health and Muscular Development, like it'd be really cool to say
Yep.
I did that. I know it's really arrogant to say, but it gets me motivated and I'm as excited as ever, even post acquisition, because I absolutely love the niche.
Gotcha. So this makes perfect sense because now you're going to the next level of your journey. You've got the resources behind you. And sometimes we have to do that. We have to sell out to a big player to give us the resources to go for your real goal, which is, hey, why not? Let's go for the world's biggest fitness site. And it all started from a small little, passion blog type idea. But can you mention too, to give our readers an idea, you just mentioned the size of it now, just before we go into it, so that people do realize the awesomeness that you guys have already achieved. Like, talk about being competitive, but you mentioned 31 million readers and the sales. What sort of sales do you do? Or, well, you call it GMV, and explain what that
Yeah.
means to our listeners. Sorry.
Yeah, no, thank you for asking. We monetize in a few different ways. And I will say that if you're starting a niche website, you should look at a few different ways to monetize because
Yep.
we are still at the mercy of the algorithm or algorithms, right? And you want to diversify your revenue streams if possible. So we, like a lot of sites, we have enough traffic to where we monetize via programmatic ads, and we don't share those numbers specifically.
No, that's
You know,
fine. Yep.
yeah. Now some people can probably guess, and some people have actually guessed really closely. I'm not going to say who. I'm not going to say what.
Well, going off
But
your
if you're,
traffic, but I won't do
yeah,
the formula here for anyone.
if
But
if you're
my guess
smart,
is it begins with A and ends in lots.
if you're smart, you can narrow it down. So we don't share those numbers, but the numbers we actually do share. We're fine sharing. So we monetize with that. We monetize with direct advertising. So we have newsletters, podcasts, articles, and companies can sponsor those directly. We monetize that way as well. And another way we monetize is via affiliate revenue, which is something that should be no mystery to anyone listening to this podcast. And if it is a mystery, I'm about to tell you a little bit more about it. So it won't be. We make a commission when we drive sales to partners. And obviously we disclose and disclaim this. For example, our reviews content has its own team, has its own editorial team. That's how seriously we take, hey, that's separate from other editorial content. It has its own disclaimers, its own standards. And in 2022, I think this is a bit of an underestimate, but so it's more than this. We drove over $19 million in merchandise sales for our affiliate partners, right? So we make a portion of that,
Yep.
and I think that where we ended up, we're now a Pillar4 company. And across its fitness verticals, because Pillar4 has several, I think we're on track to do close to 100 million in GMV. So to drive close to 100 million in sales across the Pillar4 fitness vertical this year, which is super exciting. And
Yeah.
we're playing at a big scale now.
So, David, at this point, how old are you?
I'm 33.
33. Like,
And I don't feel a day over 45. And
well, we're going to get into that in a minute. But congratulations. Did you ever think, say, 10 years ago, in your early 20s, you're into strength training and stuff, that this would lead one day to $100 million in sales?
I didn't. And I want to be clear, the $100 million is across all of Pillar4's fitness
that's
properties.
right.
So there's some great ones. Yeah.
Yeah, but you're an integral part of that company and driving those sales. Well, in your own blog, you did what, 20 million pretty much.
Yeah. It's a bit surreal. I gotta be honest with you. I got my start in content and in the startup realm at a time when everyone thought they could become billionaires overnight. This is the days of when Snapchat was getting off the ground, Facebook was IPOing. Everyone thought they had the next billion-dollar idea. Turns out a lot of those companies did not do so well. A lot of the companies people thought were going to be really big, and especially in content. For your listeners, people who are thinking about really going in on building a digital media property potentially or a website. When we started Barbin in 2016, we got some early traction. We decided we were going to try and raise money because we wanted some money to. Barbin was not profitable until 2020, so we had 4 years of not being profitable, and we knew it was going to take a while to get there. So we wanted to raise. We bootstrapped as much as we could, but eventually, the founders, we didn't have money to scale. We raised our seed round and we wanted to raise about $1 million. And we went to dozens of institutional investors, specifically venture capitalists, and it did not go well
Okay.
because people were not looking at niche content. People said, well, we want BuzzFeed, or we want you to be
Oh,
Vice Media, or we want to
yeah.
invest in those. Spoiler alert, Vice Media is now bankrupt, and BuzzFeed, the stock price, I don't know, it's worth whole company's worth a lot less than the money they raised. And it's not saying those are bad companies. They've done amazing things and they push the envelope, but we had a heck of a time raising money, and we ended up having to go with a friends and family round. And it was really, we ended up raising about $800,000, and it was really begging people we knew, some in the fitness industry, some not, to just believe in the idea. And we were not able to raise the money we thought we could, and we were not able to raise from the kind of investors we thought we could. And so I just want to point out, ultimately our investors did very well. They're very happy.
Yep.
But it just so happened to be that the conventional wisdom at the time did not predict the future, right? So for those of you who are out there, and if you fundamentally disagree, I'm not saying who's right or who's wrong, but if you fundamentally disagree with a business proposition or outlook that a certain group of people have, they might be wrong and you might be right, right?
Yep.
We got lucky. They were wrong, we were right. And I'm not going to say we predict the future all the time, but I think with the digital landscape, things can change. And especially with niche content, it's very
That's
tough to
right.
predict how big an audience can be or how big an audience can grow. Because people interested in lifting weights right now, there are a lot more of them than when we started in 2016.
Yeah. And that's something that I want to, you've just raised a few really interesting questions there in my mind. As someone, I'm a professional investor, angel investor, and we look at companies like yours. And it's interesting, when you and I connected up, you told me like how difficult it was. The VCs didn't want to touch you because, so for those of you listening, what David just said was, because this was only not that long ago, 2016, so niche in their mind, they didn't see the value. Whereas anyone listening to this podcast, David, is like you. We're all passionate about passion websites in very specific vertical niches like weight loss, weight lifting, dog training, anything to do with health, or all
Yeah.
those, and food blogs, etc., etc. So what I'm interested, though, I'm going to come back to something. There's something going on here with you, because you weren't, so most of our listeners, and say all our successful, particularly our successful graduates, they're really good at buying and building these passion sites, getting them profitable. They earn a really good income. Like one of the people that we've interviewed on here, James DeLacy, he owns
Yeah.
a strength and training site, and you heard he makes about 10 to 20 grand a month. Hey, that's really, and he wants to grow that as well. That's our typical kind of client, making $10,000 to $20,000 a month off these niche passion sites. And as you know, that's really good money. It's good for someone working at home by themselves. Here's the bit where it gets interesting. Like I started this podcast, anyone that wants to go 7 to 8 figures. Now, this is really interesting. I've got you sitting right in front of me who's done that. What was the difference? Because you obviously saw something and you went for it, and to the point where you are happy to walk away from the profitability side. 10 to 20 grand a month is a great income for someone working from home. But you and your guys decided, no, we see a real opportunity here. We can really go for it. Let's look for the long term. What helped you? What gave you that confidence that you could go the long term, raise funds, and get it to profitability? And obviously, it suddenly went, yeah, you hit a point where it does go very profitable. But I'm interested in the journey before that. For someone's sake who's listening, they need to realize, if you really want to go for that 7 and 8 figure deal, here's some of the stuff you need to do. So for you, and I guess also you were working with some co-founders. What do you think what gave you that confidence back then to just really step on the accelerator here?
Yeah, when we started Barbend, I was pretty much writing all the articles. We hadn't decided to raise yet, but what really did it was there were a series of events, of strength sports events in
Yep.
2016, and we saw these massive traffic spikes. We suddenly saw, we were getting 60,000 visitors a day for some of these events, or maybe even more. And I remember going, wait a minute, that there are a lot of folks interested. We're getting that organically, right? People are finding our content. We were getting linked as a primary source in Wikipedia pages. We were getting links from mainstream outlets because we were writing on this in a way that was really journalistic and really no one else was doing, or not many others were doing. And those spikes really convinced us this is worth going for. Now, one of those was The World's Strongest Man in 2016. Another, it just happened to be an Olympic year, the Rio Olympics. I remember writing recaps of every weightlifting session at the Rio Olympics myself. I believe there were 16 that year, 8 for the men, 8 for the women. Yeah. And we were getting linked to as a primary source because we had the results up, at least in the US, quicker than NBC did, which is the broadcaster for the Olympics in the US. And we started getting these Wikipedia links because the Wikipedia editors wanted to get the results up, and they saw us as a primary source, and we were citing our sources, and we were writing the background, and we actually knew knew who the athletes were, and we were giving context and really helping so people could get just the results. If they wanted to go deeper, they can read further along. And those results really indicated to us that this had a lot of opportunity and that we could, in theory, build something that was more than a lifestyle business. There's nothing wrong with lifestyle businesses. In fact, my founders and I, we had experimented with those with some success, right? A blog throwing off 10 to 20K a month. We had some experience with that. And those are great. But we saw an opportunity here based on some of those early traffic spikes. And it was a bit of a risk, right? Because sometimes you look at your most successful days and you're like, what if that could be every day? And it might not ever get there, right? But our theory was, well, on those event days, a lot of people are interested. But they're probably interested in other things in strength all the time. Okay. So what if we could capture that every day? And we could grow that every day. And we also believed that the community of folks who were interested in that kind of stuff was going to grow year over year. And it has. So that was really the inflection point for us, those events. It was World's Strongest Man that year, the CrossFit Games that year, and the Rio Olympics that year. We're really kind of like, oh, here we go.
Yeah. So you guys were seeing, I guess, behind the scenes, hey, whilst we're in this, what appears on the surface to be a very not micro niche, but a very specific niche, strength training, you were getting way bigger traffic than you expected at certain events, and you realized there could be a bigger opportunity here. Now, one thing then that brings us to something else is there's a couple of you. What I want people to realize is to your background, because you were already in many ways, you're already, I guess, trained for this, because mention your background before you started the blog. What did you do? Let's have a look at how you got it started, because there's a lot of people listening to this podcast. They're just starting out as well. But I want them to realize what's involved if you want to go big, but your unique skill sets and your founders' unique skill sets that you guys had.
Yeah, I had a background in editorial, so my first career was as a journalist after college, business journalist specifically. But I was also a competitive weightlifter, and I love this stuff.
Yep.
I actually co-owned a gym. I owned a portion of a CrossFit gym in New York, cool. Starting a couple of years before Barbara started, or about a year and a half before Barbara started. So I was in that community. I'd also done some writing work for the CrossFit Games website way back in the day. It was a very different thing than it is now. I had written for a number of fitness related sites. I'd actually written some business of fitness pieces for Forbes.com. And so I had this editorial skill set, and I knew that I could really turn out a lot of content myself, and we would have enough. I was like, I think I can turn out enough content to see if this will work and to prove traction. Now, I'm not scalable, right? Like I can only top out at a certain point. And my co-founders had significant backgrounds in SEO, and they had significant technical backgrounds in optimizing the sites to be fast and visually appealing and SEO optimized. And they also had a background in both ads and affiliate marketing, right? So we thought we could.
Like for anyone listening, that'd be like a graduate from one of our courses. So they're at the point where were they running their own little digital agency and stuff, and building websites for local businesses and things?
Yeah, we actually met. We were doing doing some SEO work or the first project we worked on. We had met before, but the first project we worked on together was for the University of California's medical school system, their websites. And I was
Oh,
brought in as like a content consultant, and they kind of had the SEO lift, and we had to kind of combine forces.
and
And we
that's
realized we're like, wait, I can build content systems and teams. You all are great at SEO and the back
uh,
end. What if we kind of melded those together? They already had some clients. They already had a couple at the time smaller affiliate sites they were running as well. Um, they basically said, hey, why don't you come on as a partner? And I said, cool. I also have this other idea. I'll come on, but I have this other idea, but I want to add
okay.
more work. I want to give us more work. What if we do that? And they said, okay, let's do it. And some of those other sites we actually exited between 2019 and 2020, and then kind of went even further all in on Barbend. So
Awesome.
we have seen sites at all levels. The sites making 10 and 20 grand a month, we've exited those. The sites that are significantly larger, Barbend size, we've exited those, or exited that, I should say.
Yeah.
And so we had complementary skill sets as well, and I think that was really useful. And the fact that we had some other sites that were already revenue positive and that we were still doing client work and getting some income from clients, we knew that if Barbend started growing, we could phase that client work out, which is what we did.
David, thank you so much for that, because that's what our guys want to hear. So they realize, so a lot of our student members, that's the other way we teach them to cash flow, them building up a portfolio of websites, which is do a bit of agency work, helping local businesses. You've just done this at massive scale and admittedly, there's 3 of you originally. And so over time, you had affiliate sites, lifestyle style businesses. And then as you got bigger and bigger, you just stepped on the accelerator and more focused on the big winner, which was Barbend, obviously. And you let the others, you exited the others. So this is absolutely fantastic. So David, going back to, you're a machine now. So you're already trained in this space. Give us a taste of what it was like for you. Obviously, you were the driver of Barbend. That was your passion site. How many articles did you start pumping out onto that site to really get it lift off? If I can take you back to 2016, what did you do to really go for it?
You're getting my blood pressure spiking already with that question. No, I'm only kind of joking. I was writing personally some weeks more than 30 articles a week.
Okay.
It was a lot. It was a slog. I I couldn't do it again. I just, to be honest with you, I had to really, it was not scalable. It was not sustainable.
Yep.
And for me, the fundraising was a way for us to unlock the potential to actually hire people to scale. Because not only was it something that I knew couldn't scale, it was something that I knew I couldn't do forever.
Yep.
Right. I just couldn't. I wouldn't be able to maintain that. And so that was an impetus for us to fundraise as well. But you know what? I'm glad I did it. It was a way, someone asked originally, I did an AMA recently on a marketing with a marketing group, and they asked, well, what was the cost of your content? What was like the marginal cost of your content when you started? And I said, it was my time. That was the marginal cost of our content. That was it. That was my time. And obviously it's different now. We have full-time staff. We upwards of 20 full-time staff. We have paid freelancers and contributors from around the globe. Some people who are, everyone from Olympic gold medal winners to researchers to coaches. So our cost of content has changed.
Yeah.
But we didn't have a lot of money to test, and we wanted to see if it would work. And I think we were in a position to really double down on my knowledge as a big nerd in the niche, because I really loved this stuff.
Yeah.
And
I'm building up a picture in my mind. You and your team, you bootstrapped everything, saying that first year, but you had these other websites and online businesses that were helping to cash flow things. But basically, it was your time at first. Who were your first hires? Was it mainly just getting on board a couple of writers? What was that next step?
Writers and editors. It was just, how can we grow editorial capacity? Those were our only hires for the first 3 or 4 years.
Okay. Oh, that's it. So so if you're listening to this, is exactly what we teach you guys. The number one bottleneck in this game is just getting writers and editors on just constant content. to really, so say in the second and third to fourth year, when you launched this, it was you, 30 articles a week, mate. Well done. That is seriously impressive amongst all the other stuff, with the other sites that you're doing and your own training and everything. But once you started to hire a few editors, say in let's say the second, third year, what was the velocity of articles like then? And versus, I guess, the traffic too. Can you remember back then?
Yeah, so in our first year, we got about 1.4 million readers. As far
Wow.
as velocity, yeah, thank you. As far as pretty much all organic. As far as velocity of content, I actually don't think that's the best metric, and I don't think for us, and I'll explain why.
Yeah.
When we started, I was only writing news content. I was only
Okay.
writing news content,
Ah.
and I was writing a lot of news content. But the content we produce now, we produce more of it now, but we don't produce 200 articles a week.
Yep.
And that's because even though our team is much, much bigger, and that's because a lot of the content we produce a lot of evergreen content. We produce a lot of very in-depth content. We produce content that we think is the best. Writing a 500-word news recap is a lot different than writing the ultimate piece on how to deadlift.
Yep.
Right? One of those is going to take more time with multimedia and doing original video and GIFs. Like one of those is going to take more time. And so we cast a much broader net. And one thing that we've done over the years as we've grown is we've gotten into more evergreen content. We started writing reviews. Like we started niche within niche, right? So we're like, we'll do new strength news content. And now we do strength content. We've gotten broader, right? And now we're doing some broader fitness content and wellness content.
Gotcha.
So I think it's okay to go sub niche and then grow from there.
Okay. And so for someone listening here, when you look back at your journey, thinking there's a lot of people listening to this podcast who are lifestyle bloggers, making good money, but they're deciding, do we go the next level? They hear your inspirational story, David, and they go, okay, this is what it takes. Are there any key lessons? Because obviously that would have taken a lot of work back in those days. Did it for you? Here's a question for you. Did it start to get easier as you put on more editors, or does it just build up? What actually happens when you start hitting those 7 and 8 figures in terms of traffic and everything? What did it change much for you personally?
The challenge is just evolve because there was no people management in the early days of Barbend.
Yep.
Right.
Okay.
It was, and then as our team grew, people management became a thing. I wasn't CEO to start. We didn't have a CEO until 2020. And we had grown to the size where it's like, oh, we actually need an executive structure. So I became CEO. One of my co-founders, Kenny Klein, became president. And he's now president of the fitness vertical at Pillar4. And we needed that structure, right? So the challenges became very different, right? The challenges became, how do we keep people motivated? How do we empower them to be the best at what they do, et cetera, et cetera.
So there's still, in your mind, as it was growing, it was still the same business model though, just get really good content onto the website. Is that the fundamental way you've grown this? If you look back at it, is it that's pretty much the business model still to this day?
Yeah, people ask, I get a lot of questions about, not on this podcast, but I get a lot of questions and people say, well, when are you going to start selling products? When are you going to have Barbend branded products?
Yep.
Content is our product.
Yes.
Our product is content, and we monetize that content in a number of ways. To be honest with you, I'm not saying you'll never see a Barbend brand. We actually did sell weightlifting belts for a while because we found someone who made custom-made, handmade leather belts that we really liked, and you can actually buy those on our website. They said Barbend on them for a little bit. Those are kind of cool. But then we stopped that years ago. That was just kind of a fun thing to do, right? And we would sell like a couple a day. I wouldn't know the first thing about doing inventory for a product or how to run a warehouse or how to run fulfillment. What I do know is how to build an editorial team and a content team. Perfect. And so our product, people, when you go start selling products, our product is content. And we have found ways to monetize that. It's not always the easiest, right? It's not like you write an article and someone gives you a set amount of money and like the transaction's done, right? Yeah. But the power and value of that content can accrue over time, as I'm sure a lot of listeners to this podcast know. And it's okay to treat that like a product, and you want to produce the best possible product.
And when and when you think about it, Barbend is a product, it's a brand. You've invested into the brand, and that's now become, over the last 6 years, an incredibly valuable asset, to the point where someone's, a big aggregator's come and acquired you guys. And that's what, if you're listening to this is what you're building. You're building an asset out of, your smarts in your head, and putting it down into a brandable online asset. And so, David, when you look around in the niche, some traditional media companies, they're being replaced by people like us and yourself,
Yeah.
building these niche sites. For someone listening, what have you seen, or what are your thoughts on that space, like becoming these niche sites? Have you got other friends that are doing it? Because you've obviously owned lots of other niche sites as well over the years, as you've said, but you've just sold them off. What's your thoughts? Because we want to inspire our listeners here to realize, this is obviously, my bias is this is an incredibly valuable thing to do, and an asset to create. But for you personally, because you've gone on this whole journey from owning small lifestyle passion sites through to now doing the big one, and you're involved, and you're going to go to the next level, you're going to be like the world leader in this space. I want to capture you this moment in time for someone just starting out. What are your thoughts there? What would you say to someone doing that?
I would say it's okay to get high on your own supply, in that it's okay to approach a niche that you are personally passionate about. I think that there is an opinion that if you personally love the niche or space, it makes you unobjective, and it blinds you, and it makes it difficult for you to be objective about the space. I actually think one of the most powerful things in niche content is authenticity.
Awesome.
I
Yeah.
truly think that. And if you can be authentic, that means a heck of a lot.
Yeah. And so for you, like being a power lifter and into weightlifting, I mean, that's the roots of this whole business that you've built up. It's your personal passion for the topic.
Yeah, exactly. Exactly. That is my mark of authenticity. And as someone who's producing the original content for Barbend, that hopefully could be felt or sensed by our readers. And that was really valuable.
And so what's next for you? Like, I know you've said you're going to build this into the big, into the one of the world's biggest, or the world's biggest fitness site. So as your journey, if you look back over it, you started out quite niche. You've broadened it, gotten acquired by Pillar4 Media. Just quickly on Pillar4 Media, actually, can you tell us a little bit about those guys and why they acquired you? Like, what's the story there? How did they discover you guys?
We had a relationship with Pillar4, actually, and we'd been following along with what they did, and we really liked how they were building like brand first media companies, right? Building brands, not building kind of empty brands, not trying to like cut corners, not trying to hide things. Like they're like, cool, we're gonna put our people out in front. You can go to Pillar4. I think I don't know if Barbend's up there just yet because it's still relatively new, but like you can see what companies they own, right? There are a lot of sites out there where you can't figure out who owns them, like who's actually powering this, like who's behind the scenes here. There's not a lot of behind the scenes at Pillar4. It's all out there. They're treating this like a real company with real people, and they want to build and grow brands that they're proud of. And so when they came along with an offer, a couple things were important. The math was right. I won't go into too much detail, but we thought it was a good offer for everyone involved, including our investors, which we had an obligation to. We thought it was a really good opportunity for our employees. They wanted to keep our whole team. They didn't want to scrap the website for parts, and then and just squeeze every drop out of it. They were like, cool, we think Barbend's still growing. We want to grow Barbend. We want to give you all more resources. One of the first things that happened after the Pillar4 acquisition was we hired more people. Right? That's so cool, right? We hired quicker.
Cool.
And I was like, this is great. And so their mentality of Barbend is great. How can we add fuel to the engine was really impactful, and they've definitely put their resources where their mouth is. And that's been really great to see. And I've really enjoyed, I've only been there for a few months. I've really enjoyed my time there, right? Because I feel like I have more resources, more support. I don't have to answer all the HR questions. There are people I can go to for that. Like it's actually been
Yeah.
really great. And again, they want Barbend to keep growing. They're not trying to squeeze every drop out of what Barbend is now. They want Barbend to keep getting bigger and bigger, which was our goal as well. We just have more resources to do it now. And so that's one reason I'm really excited to be there. And I honestly could not imagine a better home for Barbend and Breaking Muscle than where we ended up.
And so what's your day-to-day life like now? Is it still, you personally, I mean, are you still just really focused on content? What does it look like now that, you've been acquired by a big buyer?
Yeah.
You've got obviously different obligations too. It's not just to investors. You've got obligation to Pillar4.
I got a lot of bosses now. Yeah.
What's everyday life like for you?
Well, a little bit of this. This is a highlight of my week. I get to sit down and talk about Barbend. I'm counting this as work. I'm on the clock technically.
Yeah.
So I get to do this. I get to try and tell the Barbend story in new and cool ways. And a lot of that's in the fitness industry and a little bit outside. Kind of like this. This is not a fitness quote unquote podcast, but we still get to talk about what we've done and what we've built and what we're still building and what we're proud of. And so I really enjoy that. And I've got to do more of that. I've done a lot of that in the fitness space, doing it outside of the fitness space. I just have more bandwidth to do that. In addition, we are launching, we're with new resources. We're diving back into the video space, which is something we put on pause a couple of years ago. I still host the Barbend podcast. We might actually be launching some new podcast properties soon. So I just get to I'm working on new initiatives and integrating with our new team members because we really want to keep growing the written content, but we want to grow our multimedia as well. And so I've been plugging in there in a really fun way while still telling the Barbend story and sharing how we did what we did. And that's been a lot of fun. So it's always a real highlight of my week, and I get to start off with this on a Monday. So I'm excited. A Monday my time. I think you're ahead of me. So we're recording this on a Monday afternoon my time. So I get a lot of energy out of doing these things.
Yeah, and so in a way, you're the brand ambassador now, helping to, and you've got unlimited resources behind you. What does Pillar4 Media look to do? Does it own other? Does it own other? Like, what verticals is it involved in?
Yeah, the 4 pillars of wellness. So it's fitness, sleep, nutrition, and mental health. So there is some are more developed. They actually started kind of in the sleep space. They've moved into the fitness space. Pillar4 is still a young company. It's actually, I think, only started technically in 2017. So there's still, or maybe even 2018. So still a young company, but growing very quickly as they expand to these multiple pillars of wellness. Pillar4 is a little under, I don't even know how many employees now. I remember when we first met Pillar4 was back in 2020, and they're much bigger than they were then. I don't, a lot of new faces, but it's been really cool. I'm really excited. I've been really enjoying my time with the company.
Well, that is just so awesome, David. And it's infectious, your enthusiasm for this and what you've done over the last 6 years. I do want to say massive congratulations, and it's seriously impressive, and particularly in such a fascinating niche, strength training and weightlifting, and to see that journey, how you can build that out over time. But it's really interesting that you guys have owned other portfolio sites or lifestyle blogs as well, and you've cash flowed everything and also raised funds. You've done the whole journey. Massive congratulations. I do want to say a big thank you for sharing with our Australian audience how you've been able to build a really big site in a very specific passion niche. And for those of you who are listening, if you're new to this and you want to learn how to do what David's done, go and listen to our free masterclass where we lay out a similar strategy. This is what we teach here at eBusiness Institute, how you build passion sites and build out portfolios of websites so that hopefully one day you, like David, can build it into millions of views, millions of sales. Awesome. It is incredibly exciting, David. Thanks so much for coming along today.
Thanks so much for having me, Matt. I had a really great time.
Awesome.